How important are indicators? A lot of people say we should be looking at price, momentum, and volume only. Indicators lag the chart, I heard. I don't agree with that at all. Indicators sure lag the chart, but so does volume, and price action. I mean, everything is lagging because every single piece of data that you're looking at is going to be data that is compiled from 1 second prior. There's nothing that's going to show you what's going to happen 1 second from now. Nothing. Not one indicator, not volume, not price, not volume, not price momentum or price action, not VWAP, not trade line, not Fibonacci's, not Bollinger, not MACD's, RSI's. Nothing is going to actually give you data from 1 second into the future. Every single one of those indicators gives you data from 1 second prior to current time. Every indicator is essentially lagging. The way that I look at technical indicators is, technical indicators are going to give you guys a lot of pieces of information to help you understand the probability of a stock's future price movement. That's all it is. And there's not necessarily always going to be a right or wrong, fail-proof answer. It's not like when all you're doing is determining based on the information that these indicators are giving you. And indicators, price action, volume, that's all included. Volume is an indicator. Let's not get that twisted. Volume absolutely is an indicator. Your job is to take that information and try to figure out what's the probability of this stock moving higher. That's all you can do as a trader. It is not, I know this stock is going to move higher. You don't know shit. Nobody knows what a stock's going to do. Nobody. Everybody thinks what a stock's going to do. They have an inclination what they think that stock's going to do, but there's not a single trader on the earth that knows with 100% certainty what a stock is going to do. Anybody that tells you that they know for sure is completely lying to you. I would run as far away from that person as you possibly can run. All traders can do is identify high probability patterns. It's not that much different from figuring out probability as a poker player. Poker players, for anyone that understands poker, when you get dealt pocket aces pre-flop, that is the highest probability of you winning the hand that you can possibly have at that moment in time. Pocket aces, no matter what anything else is happening, you have the highest probability of winning, but it is still not 100%. You can have pocket aces, the JO next to you with 7-2 can just limp in big blind if you don't raise, and the flop can come out 7-7 jack. Guess what? Your pocket aces no longer is the highest probability of winning, and you're probably going to lose that hand. So trading is a lot like it's identifying the probability and putting yourself on the right side of that probability over and over and over again. And you use technical indicators to make that distinction. That's what real technical analysis is about. So the problem that a lot of people face with technical analysis and indicators specifically is they see all these indicators and they think, which one's the best? There isn't a best indicator. There's not one indicator out there that is right more often than others. Every indicator is going to sometimes be right. Every indicator is going to sometimes be wrong. You can't rely on one indicator. You have to be able to understand how multiple indicators work in conjunction with one another so you can identify the probability of this stock moving up or down. And when you can look at a stock and say, based on this information, there's a 75% probability this stock's going to move higher. You take that trade every time. That's what it's all about. I like technical indicators. I use a handful of them, but I also do use price momentum and volume. It all factors into understanding and deciding on the probability of a stock moving up or down.